We have Madan Sabnavis, who's Chief Economist at Care Ratings, now joining us here in the studio. Madan, to begin with, that big data point that actually everyone's looking at is the announcement from the Finance Ministry yesterday that 12,000 crores of scheduled borrowings will not actually happen, which essentially means that they will be borrowing that much less. How much of a positive would you say the markets would take this as?
No, I think this is a big positive which we're looking at because there's been a lot of skepticism in terms of what the fiscal deficit target will be like and whether at all there's going to be a kind of slippage. And lots of us in the market had felt that there would definitely be a slippage and a number of 5.3% also would not be attainable. But the kind of measures which the finance minister has taken so far, we tend to get a feeling that why not even a number like 5.1% for the year for the current fiscal could be achievable because of the kind of expenditure cuts which have been invoked in the last month or so. And given the fact that the finance minister has reiterated that the government is very keen on going on the path of fiscal reform and sticking to the target of 4.8%, say, for the next year. So I have a feeling that this announcement that 12,000 crores less of borrowing would take place is an indication of the fact that the way in which the finance minister has planned out the fiscal deficit for this year is more or less going to be achieved.
Madan, afternoon, what are you expecting for the borrowing target to be for the next fiscal in the budget? Are you expecting this figure to be lower so as to avoid crowding out of private borrowers?
Now, in terms of absolute numbers, it would probably be a bit higher, but I think we should go more on in terms of the ratio of fiscal deficit to GDP, which to my mind is going to be targeted at 4.8%. And hopefully, I think if the assumptions made about growth are reasonable enough, and we don't talk about something like, say, 7.5%, which we targeted last year, which hasn't really materialized, and going for something more realistic at, say, around 6%. I should tend to think that the target would be realistic and something which we could expect to be achieved during the year, provided we have certain other factors which are taken into account, especially when you're talking in terms of monetary policy action, which would, of course, depend a lot on what the finance minister has announced during the time of the budget.
Right, Madan, also if we look at the liquidity deficit picture, which as of yesterday is about 1,26,000 crores, should we expect that this will remain the story that will play out until the end of March? Because if FM will want to somewhere prove to the markets that he is capable of achieving 5.3 on the fiscal, maybe even lower, based on that, should the markets expect that any relief on the liquidity front will start coming in only in the first week of April when, expenditure or payments actually start getting released by government?
No, I would tend to agree with you out there that liquidity relief will happen only in the new financial year, because even though we're talking of 12,000 rupees less of borrowing for this current financial year, the fact remains that the number of 125,000 crores is not going to come down anytime soon, because we're having a basic problem on the banking sector where deposits are not growing, credit is also not growing to the same extent, but we still have a borrowing program of the government which is being met by the banking system. So my sense is that we'll continue having these kind of liquidity pressures. The repo window is going to continue to be very important, notwithstanding the fact that even in case we have another CRR cut in March, which doesn't look likely, but we already had one in January, which hasn't had much of an impact. So this number of 1 lakh crores and plus is something which we'll have to live with.
So Madan, finally, before we let you go, to what extent do you see the yields on the 10-year bond improving on the back of this news, and what's the range that you're foreseeing?
I think it's 7.7, 7.75, maybe maximum 7.8 for the rest of the year. Because we're also talking of open market operations of the Reserve Bank of India. We're having one happening on 12,000 crores. There could probably be something more coming up in the course of the year. Because I think that's what the RBI has followed. Have more open market operations to ensure that liquidity is adequate for the banking system.
Many thanks, Madan, for taking time out and joining in with your views.